Hello traders, the title of the video is how to become a more advanced Elliott wave trader. Alright, do you want to become a more advanced Elliott wave trader? Well, let's get started. Alright, so we use the Elliott wave pattern, the 13 specific Elliott wave pattern. We use the Elliott wave rules. We use the Elliott wave principle or theory to forecast the financial market. Now the question is how to become a more advanced Elliott wave trader. In this tutorial, I want to share with traders one aspect, the first step that one should take to become a more advanced Elliott wave trader. All right. So most Elliott wave traders know about the Elliott wave theory. Also, majority of Elliott wave traders know about the Elliott wave rules, especially the 3 essential Elliott wave rules. Elliott wave traders are able to count waves, but how one can become an advanced Elliott wave trader? That is the question. All right. Now, the reason why I use the word advanced Elliott wave trader is because an advanced Elliott wave trader is an Elliott wave trader that is able to interpret the language of the price. So the first thing that we are trading, or the only thing that we are trading, is the price action. Whether we are using MACD, stochastic RSI, market geometry, fractals, candlestick pattern, the only thing that we are trading is the price action. All right. So in order to become an advanced Elliott wave trader, one should be able to interpret the language of the price. All right. So let's look at this price structure here. You see the price structure here from, call it 1999, where I place my vertical line to this point here, 2000. All right. The financial instrument that we are looking at is advanced macro devices. Okay. This belongs to the technology sector. We also know that from 1999 to 2000, we have the technology bubble, when most of the technology stock was in an uptrend, was trending up. So this stock also, the advanced macro devices, AMD, was also trending. So we can say that there was a trending first in this session here. And then there was a correction in this session. All right. So the price went down. So the trend that has started in 2009, it has ended in 2000 and followed by a correction. So at this point in time, we will see that a correction has ended right here. Going to color that into orange. All right. So you want to understand clearly how ordinary Elliott wave traders will interpret this price move all the way down here. All right. The correction. All right. After the bullish trend. So a lot of Elliott wave traders sometimes get into trouble because they are looking for Elliott wave patterns, all right, which is okay. That's what we have to use. We have to look for the Elliott wave. We have to use the Elliott wave principle or the Elliott wave rules, which is perfectly okay. So at this junction, sometimes traders get into trouble. And this is one example that will help traders to become an advanced Elliott wave traders. So you can see that after the trending first, the price came down 1, 2, 3, 4, 5. If you color those price move into red, hold on please, into red, you see that this is what a lot of Elliott wave traders will see. All right. The confusion will start arising because they are wondering what kind of Elliott wave pattern is this one, or what kind of Elliott wave corrective wave is this one, because normally when we are talking about a correction, we are thinking of minimum price move is free. So anytime we see 3 move down, thinking of a zigzag pattern, okay, we will think of a correction. So here we have 1, 2, 3, 4. Oh, in fact, 1, 2, 3, 4, 5. Well, then we are wondering, is this a trend in fetch? Now, a lot of Elliott wave traders will see quickly that we have a violation of Elliott wave principle because the 4th wave is overlapping, okay, the 1st wave. So if anyone is calling this a trend in fetch from here all the way down here, one will quickly realize that okay, the 4th Elliott wave is overlapping the 1st wave. So we'll quickly understand that it's a corrective wave. But what kind of corrective wave is this one? All right? So now, if one is only focusing on the Elliott wave patterns, one will not know exactly what is happening here. So we have 1, 2, 3, 4, 5, but the 4th wave is overlapping the 5th wave. So we know that it's, okay, a corrective wave. But the question we want to ask now is, what kind of corrective wave is this one? 1, 2, 3, 4, 5, coming all the way down here. So some trader may say, George, it looks to me that there was a flat correction. Probably a flat correction was hidden somewhere here. The 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 is hidden somewhere here. So this is 1, 2, 3, 4, 5 here. And the 1, 2, 3, 1, 2, 3 of the flat correction is missing or is hidden right here. That can be one interpretation of the price action. Now, the purpose of this video is to open the eyes of traders so they may rely more on the price interpretation instead of the Elliott wave pattern. Now, I'm not saying that we cannot use the Elliott wave pattern, but the point I'm making here is that we can use the Elliott wave pattern to interpret the price. But the interpretation of the price is more important than the Elliott wave patterns. So what is happening here in this session here? What kind of Elliott wave pattern is taking place here? One thing that you need to understand, in order to become a more advanced trader, what I said before was that one should be able to interpret the price move. And the minimum price move is free. So you can see here, this is a bit complex for a lot of traders. They may not see it. The price came down, first move here, went down, everybody agrees, and then went up. So the first reaction, you remember what we were doing before? My apology to traders. You need to understand that the first move and the second move, whether it's a corrective wave or a multi-wave, is so important for us. Why? Because we use the first and the second wave of the multi-wave to forecast the whole multi-wave. So once we count first and second wave, we need to highlight that. So what you can do is that anytime you count 1 and 2, you can put a vertical line there. See, this is the first and the second wave. In any Elliott wave count, the first and the second wave, whether we are in a corrective wave or a multi-wave, are so important for us. They allow us to have a bit of idea, okay, or how should I put it to you? The first and the second wave, whether in a corrective way or a multi-wave, will help us to interpret the price action more accurately. Did you get that? The first and the second wave, whether we are in a corrective wave or in a multi-wave, will always help us to have a bit of idea what kind of corrective wave or multi-wave we are likely to have. So anytime you count first and second, you need to pause. You can put a 2 vertical line to highlight what you call in the first and what you are calling the second. Highlight them like I did here, and pause from them. And what you need to do, my friend, is that once you highlight the first and the second, oops, what am I doing? I'm trying to, the first and the second, whether in a multi-wave or a corrective wave, draw those 2 vertical lines. And anything after any price move, any price structure after the first and the second wave that you have counted, you will analyze that portion separately. That will help you to become a more advanced Elliott wave trader. Now, understand that a lot of traders will be banging the table, smashing their computers, doing all kinds of things, use all kinds of forbidden words, all right? And saying, George, you are coming, are you drunk? What's wrong with you? What are you talking about? You don't know what you are talking about. But if you disagree with me, just put it aside, don't get too emotional about it, and think of it and try to test it and see whether that can help your wave count, all right? The first and the second wave, draw those two vertical lines, whether in a motive or corrective way, that will help you. And then once you do that, try to see what has happened after that. So if you did that here, you will say first and second wave, and after that we have 1, 2, 3. What you need to understand is that when we are talking about the Elliott wave pattern, they are powerful tools that will help us to focus the markets. So according to the Elliott wave principle, generally speaking, I'm choosing my word carefully here, generally speaking, when we count 1, 2, 3, the first thing that is coming to our mind is corrective wave. Now, if you disagree, let us know in the comment section so we can all come down on you like a brick of rock. All right, now this is to make you laugh a bit. Anytime we count 1, 2, 3, 4, 5, the first thing that is coming to our mind is a multi-wave. All right, if you disagree, let us know. Now, if you did what I'm telling you now, talking about how to become a more advanced trader, anytime you count 1 and 2, draw 2 vertical lines to hide the first and the second wave, because those are powerful waves. Those are the motor of the trend. So the first wave is telling us the direction of the trend, possible. So when you count first and the second like this, what do we get? What can we deduct from that? We can deduct that looking at the first wave and the second wave, which did not cancel the first wave, it looks to us that if this is going to be a trend, it will be a bearish trend. Why? Because the trend is always in alignment with the first wave. Now, you didn't get what I just said now. Did you get it? The trend is always in alignment with the first wave. So whenever we count the first and the second wave, and the second wave does not cancel the first wave, we can say that if this move first and the second right here is going to be a trend, that trend can only be a bearish trend. Why? Because the trend is always in alignment with the first wave. So because the first wave, if you call this one first wave, is bearish, after we have counted the first and the second wave, we can deduct that if there will be another bearish trend in this case, that trend, if there will be a trend after that 1 and 2, that trend is going to be bearish because the first wave is bearish and there is always an alignment between the first and the trend. If the first wave is bearish, we are likely to see a bearish trend. If the first wave is bullish, we are likely to see a bullish trend. So the identity of the trend can be deducted from the first wave. As we count the first and the second wave, we can have a bit of idea. As long as the second wave did not cancel the first wave, we can have a bit of idea where the price is likely to go. So after we see this one and 2, we can deduct that if the price failed to go above this high here, there's a high chance there will be a continuation to the move down because the first wave always align with the identity of the trend. Is it too complex for you? Are you becoming more advanced trader? So understand what I'm trying to say here is that everybody can go on the internet right now and learn about the Elliott wave principle, the rules, the Elliott wave theory, the Elliott wave principle. One can also go on the internet now and learn about the 13 specific Elliott wave pattern. But in order to become a more advanced Elliott wave trader, one must learn to interpret the language of the price. And one of the tricks that we can use is to use the first move and the second move as long as the first move did not come to the beginning of the first move. That will give us that will help us to deduct or to predict the direction of a trend if, repeat, if there will be a trend. So once we do that, the first and the second, we highlight them. So now if you do that, you say first and second like this, you can see that after the first and the second, the price came down 1, 2, 3. Any three move that, okay, do not go beyond that third move is a correction. Now any three price action, so you see here, 1, 2, 3, that does not go beyond the high or the low of that third move is a correction. All right. Now we can go a little bit deeper talking about the Elliott rules. So you can see here after you see first and second, the next move was 1, 2, 3. So though a lot of traders may count 1, 2, 3, 4, 5, it's only 3 moves. The first move is this one here. The second move is this one here. And the third move is subdivided into 3. Because the third move is also subdivided into 3, is a zigzag pattern. So we can deduct. A lot of traders will come down on me a big time now because they will be wondering, John, what are you talking about? So minimum price move is 3. Corrective wave, generally speaking, is 3. All right. So here we have a pattern. So you see that is. So if I ask you, is this a corrective wave after a trending phase? A lot of traders will say yes. It's a correction. Why? Because they say it's 1, 2, 3. But now let me change this what I've drawn on my chart a little bit differently. So here we have the bullish trend, which is this section here. Now the price came down like this, and then it went up again like this. But instead of going down in one move, it came down 1, 2, 3 with the you can see here, and this move overlapping the first one here. So though we have 1, 2, 3, 4, 5, the price structure is 1, 2, 3, with the third part being subdivided into a correction. So most ordinary Elliott trader will say 1, 2, 3, 4, 5. Advanced Elliott trader that are following the step that I'm telling you now, first and second, highlight them, draw the 2 vertical line. We'll see that in fact it's 1, 2, 3, with the third move subdivided into 1, 2, 3. Have I said too much? Is anything that you do not understand? Do you have any question? Is it too complex for you? Do you feel more like an advanced Elliott trader? You think that this video will help you to become a more advanced trader. So the same thing is true. I don't want the video to be too long. When we are talking about a multi-wave, when the fourth wave is not overlapping the first wave, and the second wave is not canceling the first wave. I will be talking about that in another video. Probably I'll call it, okay, how to become a more advanced trader. Part 2. So I will call this video how to become a more advanced trader, advanced Elliott trader, part 1. So in part 2, I will be talking about the case when we have 1, 2, 3, 4, 5, and another 1, 2, 3, 4, 5. When all this move, so you remember what I said to you when talking about the Elliott extension, you have the first wave can be subdivided into 5. So 1, 2, 3, 4, 5. 1, 2, 3, second wave, 1, 2, 3, 4, 5, and then again 1, 2, 3, and then 1, 2, 3, 4, 5. So the same thing that we are trying to apply to the corrective wave here, a lot of ordinary traders will get confused because they see that 1, 2, 3, 4, 5, but it's overlapping. Why is it 5? What kind of Elliott wave pattern is this? Can you tell me which kind of Elliott wave pattern is this? We cannot see the flat correction here. Other traders may argue that we have a hidden flat correction, but I can't see one here. Maybe when we go to the lower time frame, the next lower time frame, because I'm on the monthly chart, to the weekly chart, you see a flat correction. Well, tell me. So here it is. By interpreting, by focusing on the price structure, by learning to interpret the language of the price, we will become more advanced traders. What we need to do is that we need to understand that when we count of 3, we are thinking of correlation. When we count 5, we are thinking of multi-wave. But as long as the fourth wave is not overlapping the first, and the first wave is not cancelling the first one. But again, my friends, you may say, George, it's becoming too complex. All right. So in order to avoid that, to dilute or to diffuse the complexity of what I'm saying here, what I suggest or recommend to traders is that whenever you count 1 and 2, draw the line. So suppose you were here again, so you were here, suppose you were here again, and you say, all right, first wave and second wave. Okay, what you need to do, once you count first and second wave, put 2 vertical lines there. And then the rest of the price action, monitor it. Consider it separately. So now if you were here, you will say, all right, first and second. Now here we have 1, 2, 3. Now, the next thing that you need to check, did the second wave cancel the first one? No, it did not cancel. Very good. If you count it from here, 1, 2, 3, 4, 5, is the fourth one overlapping the first? Yes. So by doing 1 and 2 and separating the first and the second, that will help you to avoid labeling wave pattern wrongly. The move again from here, 1, 2, 3, 4, 5, is not a trending first. It's another scenario when we have the first, the second, and the third move subdivided into 3. So it's just a gigantic 1, 2, 3, 1, 2, 3, followed by 1, 2, 3, 4, 5 down. So in fact, the flat correlation is right here. A bit messy, and this is what we are talking about, the reality of the market, when the area wave pattern and the market reality are not agreeing. The 1, 2, 3, a bit subdivided into 5, complex, 1, 2, 3, the third part subdivided into 3, and 1, 2, and 3. Again, 1, 2, 3. Now we have the flat correlation happening here for the AMD stock, advanced macro devices. Now it's 1, 2, 3, 4, 5. Now our flat correction, which is quite messy, you may say, Joe, what kind of flat correction is this? It is a flat correction that went beyond the starting point of the prior trend. Have you ever seen something like this? But this is what we are talking about. The reality of the market, the area wave theory, the application of the area wave theory to make a practical area wave decision. So where are we going? And what is happening now? We'll talk about that in another tutorial. If you find this video totally useful, let us know by giving us the thumbs up. If you think that this is another rubbish video, let us know by marking it down. I think that this is an essential tutorial that will help traders to make excellent trading decisions. Give us the thumbs up and share it with your friend on Google+, on Twitter, and also on Facebook. All right, as always, if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. One more thing before we close this video, I need to remind traders, I know a lot of traders out there that will prefer that I give them tips, talking about forecasting a particular stock, and then they can use that video to place a trade. I do not do those things. What I'm trying to do at the 24 Elliott Waves YouTube channel is to teach traders about the area wave principle, the area wave theory, the wave pattern, how one can use it. But I will not tell traders to buy and sell or forecast a particular stock and tell traders go and buy and sell. I may teach traders how to forecast the market, but I will not give a direct buy and sell tips in the financial market because I'm not a financial advisor. There are rules in the financial market, and I do not want anybody coming to my place, knocking my door, and asking me all kind of questions. So I know that there was some comment when they were wondering, George, we have been learning about area wave, we learn it now, we master it. Tell I do more live video. I may do live videos when I demonstrate how to use the area wave theory, but I will not tell trader to go and buy and sell directly. All right, that's not part of my intention. Our purpose at 24 Elliott Wave YouTube channel is to simplify the Elliott Wave theory without diluting it and making it more accessible to all technical traders. So this will conclude our discussion today about how to become a more advanced Elliott Wave trader, part 2. Part 1. In part 2, I will be referring to another price structure that will help traders to become a more advanced Elliott Wave traders. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to become a more advanced Elliott Wave trader, part 1. See you in part 2.